You say Boeing is one of your least favorite stocks going into earnings, but you have it at outperform, and you also have a price target of 285. Stock's trading at about 200 right now. So it's your least favorite, but you seem pretty optimistic.
Yeah, so we still obviously optimistic on the longer term. We think travel continues to hold up very well. We do think the free cash flow outlook that the company had previously provided probably has a little pressure, and we had been below that expectation in our numbers. And we do feel that $200 a share of the setup for the longer term remains favorable. Although obviously when we had published on our preview and we said, you know, the near-term outlook certainly is more challenged, and we thought there was some pressure on the stock heading into the results here later today, obviously. But still think the long-term fundamentals do remain intact for the company.
All right, so long-term fundamentals remain intact, but in the short term, there's certainly a lot of pressure on the company. An FAA investigation, that door plug blowout, how does that impact the forward guidance for Boeing?
Well, obviously, that's the million-dollar question. We're hoping Boeing is able to give fairly definitive guidance or specific guidance for this year. Remember, they had moved to 38 a month on the MAX in December prior to the end of 2023. If you think about that with some of the inventoried aircraft, we do think the company still guides to MAX deliveries this year of 500 to 550, which would be in line with consensus estimates for the MAX aircraft. Timing on potentially further increases in the production level, that's the big question today as we think about when the FAA looks to really pursue this investigation and how much pressure they expect to have on Boeing as you think about further rate increases.
All right, Phil LeBeau's done a lot of great reporting on this. There are certainly a lot of unanswered questions going forward when it comes to the MAX 7 and also the MAX 10. And then at the same time, it's like a good news, bad news situation. Deliveries to China are still going on, but United, a key Boeing customer, is starting to look at Airbus. So just wrap it all up in a bow for us going forward. If you're an investor, how do you view some of this risk around the new MAX certifications? And then also, China's good, but United looking at Airbus, that's certainly bad.
Yeah, obviously that's not a great headline. I do think incumbency is very strong in this industry. The MAX has a very large backlog. Commercial travel continues to be very robust. There are other airlines that would gladly step in if, in fact, there are some airlines like United that might move out from some of their slots. So we feel like in a very good demand environment, the company clearly has execution issues it needs to work through, and that's why we think we get through some of these near-term issues and the stock does remain attractive in the longer term. The MAX 7, which the company has talked about from a certification standpoint, likely pushing out, very limited in terms of its backlog and what it represents in the business today. So we still like the story longer term, and we'll see what the company says later today.
So again, FAA investigation going on right now. If there are delays in certifying the 7, which you say doesn't have that big of a backlog, but also delays in certifying the MAX 10, does that change your outlook? Does it change your price target or your rating?
Specific delays on those? No, it depends on the incremental cost to ultimately get these certified. But you know, those particular models, the 7 and the 10, are already several years late, and I don't think in terms of the backlog that is overly significant. However, I would make one final point. There obviously is a replacement to the 777 coming, the 777X, which is expected in 2025. If these delays extend to other parts of Boeing's portfolio, like the 777X, that certainly could be a greater risk than we've contemplated.